Welcome to My Finance Teacher and a brief market review. Starting with S&P 500, previously I expected the October low to be a daily cycle low, to be followed by a lower low into the intermediate cycle low. And by now I got to admit, as some of you commented, the strength of this recent rally suggests a new intermediate cycle since that 13th of October. So let's move this zigzag indicating our intermediate cycles over here. The arrows indicate daily cycle lows. So it looks like we've seen another relatively short intermediate cycle lasting between mid-June and mid-October, unless of course S&P 500 just drops out of bed and creates a lower low relatively soon. Then that would count as a proper intermediate cycle low. But that is unlikely given the strength of the rally so far. And despite this recent strength, I was lucky enough to make negligible profits shorting into this temporary decline in early November, as I did expect S&P 500 to drop down into the intermediate cycle low. That's probably just an example of importance of stop losses, especially when shorting. And going forward, S&P will likely continue to go higher for another few days. It will reach this 200-day moving average relatively soon, perhaps in another few days. But after that, I still expect a temporary correction only down into the short-term daily cycle low, maybe retesting the middle of the Bollinger Bands or perhaps the 50-day moving average, instead of the intermediate cycle low correction as I expected previously. Currently, once the markets open today, this daily cycle will be 33 days long. And as usually these cycles last for around a couple of months, in another few days, S&P, as I mentioned, might see some resistance from, let's say, this 200-day moving average. And based on the average duration of these cycles, I would expect the declining phase to start perhaps within another 1 or 2 weeks, with a daily cycle low perhaps, as I mentioned, somewhere around the middle of the Bollinger Bands or the 50-day moving average, somewhere around the FOMC meeting in mid-December, followed by a push into the seasonal Christmas rally. With the recent CPI reading below expectations and today's PPI reading slightly below expectations as well, we see that the market expects FOMC to hike by 50 basis points rather than by 75 basis points. Looking at what was the expectation about a month ago near that intermediate cycle low, we see that the 75 basis point hike had over 43% probability, while now it's under 20%. So the Fed is expected to be less hawkish with lower inflation. And if expectations turned out to be true, that might help, as I mentioned, propel the markets into the seasonal Christmas rally. Looking at optimism index in the general stock markets, we see a strong push over 50 over the last month, also suggesting a new intermediate cycle since the October low. But we are now at 56, and while we are in the longer term decline all the way since the beginning of the year in this bear market, one probably should be cautious with the optimism index approaching anywhere around 60 or above. So as I mentioned, perhaps another few days for the general stock markets to push higher towards the 200-day moving average on S&P 500 before a bit of a resistance and perhaps a decline down into the first daily cycle low starts. Having a quick look at crypto, recently a few days ago I suggested to the members at myfinancesteacher.org that cryptos have either made a cycle low recently in early November, as cycles usually last for around a couple of months, and the November low would imply a cycle lasting for 63 days, or there is still a chance of a retest of the recent lows, meaning that cryptos have either produced the cycle low or are in the process of bottoming out. So perhaps some gradual accumulation around these levels for at least a temporary bounce up to and above the 50-day moving average might be an interesting idea. Looking at the Bitcoin optimism index, we see that it's all the way down at 11 right now, and it was below 10 over the last few days. And looking at the 10-day moving average of this optimism index, that's the green line over here, a little bit difficult to see. It's at 34 right now, and usually when it's below 30, that's when Bitcoin cycles usually take place. So these are all signs that a cycle low is in the process of playing out either a few days ago or sometime relatively soon. And to be clear, I don't expect cryptocurrencies to create any significant gains over the next cycle, but at least some sort of a relief bounce is due over the next few weeks. Looking at energy, you know my view at crude oil from some of my recent videos. We have seen the intermediate cycle low over here at the end of September, and together with the members at myfinanceteacher.org, we've built some positions somewhere around this second half of October with some comfortable stop losses over here for a very likely rally into a new crude oil cycle. Again, we might not expect new highs in this cycle, but a test of at least the 200-day moving average is very likely sometime over the next few weeks. After all, looking at the market sentiment optimism index on crude oil, it has bottomed in the mid-30s, and while history suggests that sometimes this optimism index can drop all the way down to 20, that's not a very common occurrence. Anywhere in low to mid-30s is usually where crude oil cycle lows take place. By now, the optimism index hasn't risen anywhere close to even 50, so there is still potential for a push noticeably higher, at least towards that 200-day moving average. And most excitingly, a few days ago, just before this most recent push higher in iron ore, we were fortunate enough with the members at myfinanceteacher.org to acquire some positions in iron ore producers, which since then have pushed significantly higher. Iron ore cycles usually last for around 4 months, so based on the average duration of these cycles, based on how oversold iron ore was back in late October, based on market sentiment, I talked about that in one of my recent videos, there were a lot of signs suggesting that the cycle low was actually taking place, implying a rally into a new cycle. So that's a quick overview of the market so far, and of course we do have a range of assets that we keep an eye on. So for more updates, make sure to join us at myfinanceteacher.org. The first month is only $5, which is basically nothing, and it's $10 per month after that, which again, in the current inflationary environment, is only enough to thank me with a couple of beers. Have a nice day, bye bye.